Hey, this is Mike, and I want you to imagine for a moment you had access to a time machine and you were able to go back to the year 1986 with about $10,000 in your DeLorean or your pocket or whatever. So, what's the first thing you would probably do? You take a time machine back to the year 1986. Well, you would probably, if you're a savvy investor, you'd put that all $10,000 in Apple stock. So, out of curiosity, I'd like to look at how Apple has performed since the year 1986 because, as you know, Apple is now one of the largest companies in the world, but it's been quite a ride for the stock. It hasn't been a straight ride up, and I wanted to make a point about investing in Apple stock from 1986 up until today. So before I dive into the video, if you could please leave a like, that'll help you find more of these videos and help others find these videos. So I'm using this website, portfoliovisualizer.com. They have paid tools, but they have a free tool where you can back test your portfolio or any portfolio idea that you have. So basically for this asset allocation, I just went 100% into Apple starting from 1985, but actually starts from 1986 up until today. So if you had $10,000 invested in Apple in January of 1986, how much would you have as of November of 1st of 2020? Well, that $10,000 would have turned into $14 million with an average rate of return of 23%. The best year in Apple was up 211%. The worst year for Apple was down 71% with a max drawdown of almost 80%. So just imagine this for a moment. Let's say you're not investing in Apple, but let's say you find a stock that you really believe in and you put $10,000 in that stock. And 35 years later, it'll be worth $14 million. But would you be able to handle the worst year being 71% down? Would you be able to handle a max drawdown of almost 80%? I mean, that would be kind of hard. But what I also find interesting is that the average rate of return was really 23%, which is very, very high, but not crazy high. But it just shows if you take money and you put it into a stock that outperforms the market by a factor of 2 or 2.3, you could turn 10,000 over 35 years into 14 million. So let's take a look at the chart here. As you can see, Apple, it wasn't a straight right up. In fact, really from like 1987, if you bought, let's say at the peak here, September 30th, 1987, you actually did not make your money back. You did not realize a profit for 13 years. So Apple, in this incredible run where Apple has turned $10,000 into $14 million, it was dead money for 12 years. So that's kind of amazing. And let's look at the annual returns of the stock. Now, if you look here, it wasn't a straight right up. In fact, 1, 2, 3, 4, 5, 6, 7, 8, 9 out of the 35 years were down. So almost 30% of all the 35 years that Apple went from $10,000 to $14 million, 9 of those years you were down, and in 2000 you were down 71%. So let's look at the start. 1986, you had big return, 84%. Then you had 108%. Of course, we had the crash in 1987. The market, Apple gave back some money, had a little bit of a ride in the early 90s, and then had a big fall, fell by half. So imagine this: you get these big returns, and then year 8, let's say you own the stock, year 8, now you just got your money cut in half. Now you go into the 90s, had a good return there, and then this was sort of where it looked like Apple was dying, 95, 96, 97, and then the big turnaround when Steve Jobs came in as the interim CEO and the iMac came out, 211% return, 151% return, and then boom, 71% loss. Imagine holding this stock for all that time and having a 71% loss. I don't even know if I could hold on to a drawdown like that. Recovered, then you had another big year, 2004, 200%, 100%, 18%, another 100%, and then boom, 56% drop in 2008. I tell you, a lot of people would sell off in that instant. Then you have big return, 146, and up until 2020, you've had almost a 50% return. So as you can see, Apple had 1, 2, 3, 4, 5, 6, 7 years where more than doubled your money. But then it also had a 71% drawdown and a 56% drawdown. So the moral of the story is, if you really believe in a stock, you really got to hold through it. I mean, if you want to hold through a stock like Apple, if you want to get rich with one stock trade, you got to be willing to deal with an 80% drawdown in a year where you're down 70% and another year where you're down 50%. So for everybody who's into Tesla, or maybe you think NIO is going to be the next stock like Apple that's going to give you this type of return, when you see these kind of drop downs, you have to ride it. You just have to ride it out, you know. And actually, the best way to ride out stocks like this, if you want to get into a speculative stock, is when with your initial investment, it can't be money that you care about. So if you did go back in time with $10,000, this can't be $10,000 that you're using for, you know, your mortgage or your car payment or anything. It's just you got to put it away and then not even think about it. So I just thought it would be really interesting to show you, because everybody talks about how, you know, if you bought Apple stock way back then, you'd be a millionaire, but it would have been a very tough ride. You know, you'd have to ride out some incredible drawdowns. So I thought that was pretty interesting. I hope you enjoyed this video. If you did, please be sure to like the video and go ahead, subscribe, and turn on notifications. Okay, thanks. Bye.